Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this point of time. It's a listless day of trade for the markets. The Nifty trades little unchanged. IT and pharma stocks are the top sectoral losers. Larsen & Toubro is among the top Nifty gainer after a strong second quarter. The management also maintained its FY19 guidance. Tata Motors gains after the subsidiary JLR rationalizes fresh investments, citing uncertainty surrounding Brexit and erratic demand in China. State-owned refiner HPCL is expected to be hit by rising crude prices. GRMs are likely to decline as well. That's all the top headlines that we are taking at this point of time. But Neeraj, what are you spotting at this point of time?
Well, I think let's start with the markets, Darshan. Thanks for that. And afternoon viewers too. It's remained that way for most part of the trading day. The Nifty Bank has done rather well compared to the Nifty and the Sensex. So the broader markets have done rather well for themselves too. The small cap index, the last time I checked, was up about 1.84%. Will come up on your screen. The mid caps and the small caps. Mid caps up about 1%. Small caps about 1.8%. In fact, 2% now up for the small cap index. So it's a good afternoon of trade, to be honest. The market breadth too looking fairly positive. Bring up what the world markets are doing for just a fraction of the moment before we talk about what the heat map is looking like. The world market should come up on your screen. Europe, well, trading flattish, and I would reckon that the US futures too would be trading not really with a dramatic uptick in the session today, despite the fact that yesterday's session was a decent day. US futures too should be trading slightly shallow. But the heat map will come up on your screen, and this is the US futures, well, just about flattish. The heat map will come up on your screen, and very quickly before I hand it over to Darshan as to what's happening at the broader end of the spectrum, just mark 2 or 3 names. Yes Bank, strong moves about 8%, but L&T, to my mind, the winner of the day on the back of numbers and commentary, up about 4.5%. IndusInd Bank, the details of their exposure to RNFS don't seem to have hurt the stock too much, about 4% higher. Axis Bank too, another 3.5% higher in trade, so good going. And Indiabulls Housing Finance. So some of these beaten down names are bouncing back well today. Aisha doing reasonably okay. M&M, the numbers are out and they are doing okay. By the way, as we speak, Berger Paints results are out on their screen as well. And that stock too trading flat. On the flip side, Lupin 3.5, Tech Mahindra, yesterday's top gainer down 3.5, but that's to be expected because all of IT stocks are correcting in the session today. From Tech Mahindra to HCL Tech to Infosys and TCS, all of them down in the session. I don't know if the same replica holds true in the mid-cap space session.
A lot of stocks are doing well in today's trade. I'll point a few, and basically it's the high beta counters which have managed to inch up significantly. Take a look at some of the stocks that we want to highlight. First of all, the buzzing stocks and the stocks at 52-week high. There is Adani Power and Adani Enterprises. Both of them have reached a 52-week high, so they are clearly buzzing in trade. Because of the auto sales number, Ashok Leyland has reacted negatively. Surprisingly, Maruti, despite a weak set of numbers, has managed to pull up in the green. And at this point of time, if you're looking at Escorts, that seems to be the top gainer on the index. The other counters that we want to point out are the counters which are buzzing in trade. You have the mid caps or the small cap counters. You have a PC Jewelers or the high beta counters. Reliance Communication and Shrey Infra are the counters which are managing to hold on. And a couple of other stocks that we want to highlight include basically some of the cement stocks which are doing well. What is weak in today's trade? Lupin as well as Dabur. Now, both of them came out with numbers yesterday. The commentary was rather weak, and after the conference call, there seems to be a concern about the analyst in terms of growth, and that's why both these counters are down in trade. But Agam is here. Agam, on the F&O side, what are you spotting?
And as you know, you guys have already mentioned, the benchmark indices are flat right now. We saw some strength earlier in the day that turned into weakness. But right now, when it comes to your indices, you know, we're not really seeing too much movement. In fact, the Nifty is as flat as can be. And the open interest it has increased to up as much as 5% towards accumulation, but not too much to speak for there. And it's the same for the Nifty Banking Index, which does advance by as much as 0.7%, but again, open interest up 8.3%, and that's where we do see some longs building in. The India Volatility Index has also come off to a certain extent. It's down 2.4% to around 19.3, still around the level of 1920. And when it comes to the changes in open interest right now, we are looking at the 10,000 put seeing the maximum open interest. Of course, on the higher end, we aren't seeing too much when it comes to your accumulation in calls. So, you know, the likes of 10,000 10,500 and 10,400 are the one where we see max OI. Coming and talking about the most active options today, it is 10,100, 10,200 and 300 where we see more writing when it comes to calls, especially given the fact that the Nifty is above the mark of 10,300 right now, in fact inching towards 10,400. But moving on, let's talk about some stocks then, and let's talk about IGL because that stands out considering it has the most increase in open interest right now. It's up 53% when it comes to its OI. Longs building in even as the underlying advances by 5%. That's followed by Bata India. That's also up and about, longs there. We have Siemens India once again reacting to earnings. We have seen gains there, 24% added in open interest. And finally, Exide. Exide is one of those which is under pressure right now, down 4.5%, 26% in open interest. So shorts there, but on the whole, it's been a fairly, well, I would say a range-bound day of trade for the benchmark indices, and we continue to track more developments there.
Okay, so we'll watch out for all these counters, but we're in the midst of earnings season and state-owned refiner HPCL is expected to report a mute quarter on the back of rising crude prices. Somit Sarkar is standing by with all what the street is pricing in.
Well, the street is expecting a muted set of numbers from HPCL. Now, if we see compared to last quarter, the company's revenue is expected to be higher by nearly 8% to close to 72,845 crore rupees, while the EBITDA, that is expected to decline nearly 13%. Margins are expected to contract to 3.8%, while the net profit is expected to fall nearly 13% to close to 1,500 crore rupees for HPCL. Now, the gross refining margin, that is the key number for the oil refiner, now that is expected to come down to around $5.58 per barrel because of lower inventory gains in the second quarter. Now, inventory gains are expected to be lower because of relatively lower hike in crude oil prices in the second quarter compared to first quarter, and that's the reason why inventory gains would be lower for HPCL in the second quarter. Now, in the marketing business, if you see, the fuel margins were quite steady for HPCL throughout the second quarter. Now, the gross marketing margin earned by HPCL on sale of every liter of petrol, now that increased to around 1.6 rupees per litre, while on diesel now that increased to 2.2 rupees per litre, and on the back of this the marketing segment is expected to be a bit steady for HPCL. Now, if you see the operational numbers, that is the crude throughput, and that is expected to be higher by nearly 4% to close to 4.7 million metric tons, while sales are expected to be down by nearly 3% to 9.4 million metric tons. Now, key things to watch out for, now that would include the company's crude sourcing strategy amid the Iran embargo and decline in Venezuela crude production. Along with this, the status on Vishak refinery expansion project and management guidance on future capital expenditure would be keen things to watch out for from HPCL earnings.
Okay, Somit, thanks a lot for that. Now let's hear in the market voice S. Naganath of Franklin Templeton Alternative Investments on where does he see the market in the next 12 months and why does he feel that gold is an underappreciated asset. Listen in.
In a few words, volatility and more volatility.
More volatility.
Yes, absolutely. I think, as you rightly pointed out, 2017 was a year when you had a bull market in equities across the world, including in India. We had a fantastic year. 2018, Feb, March told you that volatility can re-emerge, and it did. And then we forgot about it in April, May, June, July, and August until we got to see it again in September, October, not just here but across the world. My sense is that investors are slowly waking up to the possibility globally that growth could slow down in the next year or two. And there are reasons for this. One is the trade tariff issues. I think initially people did not pay enough attention to it. And for some time I thought that, people should be focusing more on this because this has the ability to eventually slow down global trade, disrupt supply chains if the trade tariff issues intensify. And all of that could have a chilling effect on global growth. And now I think I see a lot more mainstream, news articles and opinions implying that, yes, that could be a potential cause for concern, unless it is resolved in the near term. The other is that the trade tariff issues did lead to some currency volatility, and you could see more of it, as some countries that are affected by it look at the potential for some degree of currency depreciation to blunt the impact of the higher trade tariffs. And often currency volatility can then spill over into equity and bond markets, and then that has its own set of variables and other factors that come into play once you have higher currency volatility then affecting bond yields and stock price valuations and so on and so forth. So I think if I look out over the next 6 to 12 months, my sense is that the trade tariff issue could continue to be a leading factor in contributing to this elevated volatility in the markets.
Lower growth equal to maybe lower crude demand, equal to maybe lower than expected inflation. All of that for a country which imports dollops of inflation might not be that bad.
Yeah, I think if you're talking about India's oil imports, I think it's going to be highly beneficial for us, But again, all this will settle down in the next 6 to 9 months. Certainly, if there is likely to be a growth slowdown, as I anticipate in 2020, reflected in markets in 2019 or even from now, maybe the spike in oil prices is just a flash in the pan, and eventually oil settles down much, much lower, which will be hugely beneficial for India. But like I said, that may not help you in terms of export growth if global demand is subdued, but at least you'll benefit hugely from lower oil prices. Likewise, that will help the currency, which has depreciated recently, to sort of begin appreciating again. And one other point which I'd like to make, which often is not mainstream, not a focus of mainstream analysts, is gold. We have lots of gold in the household sector, years of buying by households as an investment, not mark to market, right?
True.
It's held as a real long-term asset.
Yeah.
And, we've spent lots of dollars buying this year after year after year. But, if over the next 3, 5, 10 years, there is a feeling that inflation is now back. And, in the aftermath of the GFC in 2008, people said, oh, there's so much QE, and where is inflation?
True.
Inflation never came because much of the extra liquidity actually went not into the real economy, but into the financial markets. Where was inflation? It was in financial assets. Bond prices went up, bond yields fell, equity prices went up, and, P multiples went up. So the inflation was in financial asset prices, not necessarily in, the real economy. But now my instinctive view is that the real inflation is going to come back because of, tariff issues on the one hand, maybe, temporarily higher oil prices, wage pressures, etc. You may have, supply disruptions because of supply chains getting impacted, etc., all of which contribute to these price increases. And if at all, you have, hypothetically, another round of QE in 2020 or beyond, because there is a recessionary situation, then this time around, my view is the bond market may not take too kindly to QE, and in fact, yields may go up as opposed to going down, right? So, the coming back to gold, all I'm saying is, if gold prices move up in response to what the markets perceive around the world as higher inflation, I think this latent holdings of gold in the household sector in India will see a significant wealth impact, which I think is very underappreciated today by the markets.
Whether you, in this rally that we'll, well, from a bull's perspective, hopefully see, or in the subsequent moves that happen, do you believe that the non-index names, and by that I'm largely referring to the mid caps and the small caps, can they make a meaningful comeback? Because until 2017 it was all about what the broader markets did. Yeah. Somehow they've gotten clobbered badly in the last 3-4 months at least. Can they make a comeback?
Well, I mean, technical analysts who follow this, do make the point that yes, there could be a comeback, but to assume that all mid caps and all small caps will bounce back with equal vigor and gusto may not be the case. I mean, each one according to their financial prospects, etc., has to be considered.
Now, if you allow me to interrupt, sorry. So I didn't mean the index per se, but what I'm trying to get a sense from you is that hypothetically, if you are deploying money right now because you're finding value in certain pockets, are you even looking at the smaller end, or are you keeping yourself largely restricted to the largest top 100, 150, say 200 names?
We are limiting our focus to the large cap companies because that's where the liquidity is.
Okay.
Yeah. So, again, we take short-term trading views, so what you need is liquidity.
Liquidity.
Yeah, so we would rather like to focus on those stocks where there is ample liquidity, and that is in the large cap segment.
Of course, entire conversation with S. Naganath on the website as well. Bajaj Electricals, they've reported second quarter numbers today. Let's discuss the quarter gone by with Mr. Anant Purandare. He's the CFO of the company. He joins us right now on the show to talk about the quarter gone by and the outlook ahead. Mr. Purandare, thanks so much for joining in. Sum up the quarter for us. How did the quarter look operationally, and how was the performance of the EPC business? Because from the looks of it, the numbers have looked very strong on that front.
Yeah, I'm really happy to share the performance of this quarter because there is a substantial growth in the top line. We achieved around 1,598 crores as against last year. This quarter was 935 crores with the growth of 71%. Even there is an improvement in profitability. If you look at PAT level, our profit has grown by 79.6%, which is from 18 crores to 34 crores in this quarter. And both the segments are doing good. The consumer product segment is growing by 25%, and the EPC is growing by around 127%. That is because of the orders what we got for the UP projects.
Anant, the other part I wanted to ask is what constituted the big jump in this EPC business? And secondly, if you're looking at it, the margins are not the best because considering what you did in the July quarter, you did some 3,300 crores operating profit on your EPC business on a top line of 5,400, on a top line of 542 crores. This time around, it's 40 crores on almost close to close to 1,000 crore top line. So the margins haven't increased much on the EPC side.
Right. Correct. Your observation is absolutely right. First quarter performance was very good as compared to this quarter. Basically, the consumer product margins are down because the input prices are gone up and we have not taken the price increase in the second quarter. However, I would like to say that we have taken the price correction or price increase in the third quarter. So obviously that correction will happen in the third quarter. As far as the EPC margins are concerned, obviously though the top line has grown, but the EBIT margins are not expanded as compared to the top line because the orders what we have taken in the UP, their margins in comparison with our other projects are little lower side, and that's why though the top line has increased substantially, the margins are not expanded. But however, on absolute number, it is a good performance.
Saying that this top line increases only on account of one single project in the UP, and by in the third quarter this number won't come in on the EPC side?
No, this is not a no, it's not a single order. There are 16 packages. One is Madhyanchal and Uttaranchal. There are two parts in the UP that the projects are going on, and there are different packages. So power distribution is a major contributor to the EPC turnover. There are other EPC segments which are like a transmission line tower and luminaires and illumination. But obviously the major top line is driven by the power distribution, and this order will have to complete in next 6 months. So current order book for my power distribution is 5,800 crores, and for transmission line tower it is 1,280, and high mast and street light is 220 crores. So total order book what we have for the EPC is 7,300 crores.
And I would reckon that because of, I mean, I remember the conversation about a couple of quarters ago when you bagged these orders, and Mr. Bajaj had said that a large portion of these orders will have to be finished before the elections. So I'm guessing that the top line growth for the next couple of quarters, primarily because of the UP orders, would be high for the company.
Absolutely, you are absolutely right. And we are expecting to close EPC by year end around 4,000 crores with the growth of 60% as compared to last year. And as far as CP is concerned, we are expecting the similar growth to continue. Rather, it will be a little better in the second and third quarter, considering Diwali, winter, and then summer product. I think we are expecting to grow at 30-35%. So we should close CP at around 3,000 crores. Overall, company should do around 7,000 crores in this financial year.
And are we to presume that because of the slightly lower margins on that, the EBIT margins, blended EBIT margins, would be in line with what you've done in this quarter?
As I mentioned, CP margin we are expecting to improve two reasons. One is
but
that
the larger
we are
portion
taking the
would be
price
the
increase
EPC, right?
across the product except lighting. Right, but as I said, the CP is growing at around 30-35%, and that is also a substantial share in the top line. And third quarter and fourth quarter, the product mix is in favor of a better margin. As far as the EPC margin will concern, those will be more or less in the same range.
My final question, leave us with some guidance of what you will do for the year. You mentioned briefly how the top line from each of these businesses could be for the end of the year, but top line, maybe margins, and maybe a bottom line estimate of what you would do in the year FY19.
That's what I said. If everything is as per our plan, the CP margins has to improve at least by 100 basis point, and EPC margins will be in line with what has happened in this quarter.
Top line, bottom line guidance for the year?
Yeah, top line as mentioned, total 7,000 crores.
Bottom line?
CP to grow at 30-35% to clock 3. Bottom line, obviously, there are various things, interest are the same, but I think it should be obviously far better than the last year.
Okay. Yeah, well, that's probably evident from how you've done in the first couple of quarters itself. Congratulations on a good quarter, and thank you so much for joining us and speaking to us, and all the best for the quarters ahead.
Thanks a lot.
That's the CFO of Bajaj Electricals with their thoughts on how the numbers have gone. Well, the numbers have done reasonably well, and the stock is doing reasonably well too, 4.5 to 5% higher. But I must say, it's something that they've already spoken about in the past as well. Large orders from the state of Uttar Pradesh to be executed before elections are over would mean top line growth in FY19 would be substantially higher, and the management reiterating that 7,000 crores at the end of FY19 is a fairly decent number.
Okay, just wanted to point out a few stocks. Leel Electricals, I'm very surprised that despite CARE rating revising the long-term rating of the company to default, the counter is up almost 7%. You could see once the news came in, a downtick was seen on the counter, but it has managed to recover significantly from the lows of the day. Other is Dhunseri Petrochemicals, which came out with numbers. I just have the bottom line number with me, 21 crores versus 16 crores, so that seems like a sizable jump that's come in. It's reacted positively to the numbers, so that's moving up in trade. Pull up Hindalco, and the counter is on an absolute tear. The company will report its numbers tomorrow, but remember, ahead of Hindalco reporting its number tonight, Novelis will report its numbers on expectation of strong, because if you see what has happened is aluminium prices have remained very strong of late, so expect strong numbers from Hindalco. The other counter is Ultratech Cement. Ultratech Cement has moved to the highest point of the day. Cement as a pack has been doing well. Pull up ECC, pull up Ambuja. Of late, there has been a little bit of traction that's been seen. Neeraj, if you remember a couple of days ago and over the past few days, there have been a lot of blocks that you saw on cement counters. One big block on Ambuja, and over the next few days, even on some cement. So I think there is some bit of sell flows or sell flows that are going out of cement counters, and some of the cement counters have actually managed to react positively now.
Yeah, absorbed well, I would reckon, for some of these companies as well. But yeah, let's wait and watch what happens there. I don't know if there were some sell flows on some of the auto counters as well or no, but some of these companies hit a speed bump in October as festivities failed to trigger, or part festivities failed to create a sharp buying. Rising fuel prices, increased insurance premium can also be probably blamed for a relatively slow month of October. Yatin Mota now joins us with a sum up of all the numbers that have come out thus far. Yatin, good afternoon.
Afternoon, Neeraj. Thus far it has not been that great. Ashok Leyland also disappointed. That company was the first one to report their numbers. Now, if you look at Ashok Leyland, a total 15,150 units sold versus the Bloomberg Quint estimate of 17,000 units. More importantly, the total sales stood at 15,149 units versus a level of 13,000 units on a year-on-year basis. However, the medium and heavy commercial vehicle segment, which was expected to post double-digit growth, we only saw 7% growth coming in there. So, growth really disappointing there. Similar is the case with Maruti Suzuki. we were anticipating, the total sales to come in at little over 1.55 lakh units, and the total number stood at only 1.46 lakh units, which is almost a flat growth on a year-on-year basis. So clearly the festive cheer is not there as far as the passenger vehicle segment is concerned. And finally we had Escorts coming out with the total tractor sales data, which was slightly healthier than the peers, 29% growth seen there. And Mahindra & Mahindra also reported their total automotive sales. So the total automotive sales stood at a strong 58,146 units. That was a strong number versus the Bloomberg Quint poll. But the tractor numbers for Mahindra & Mahindra is not yet out. It's to be seen really how do they release their monthly numbers, because tractor is one segment depending on which we could see some sharp stock reactions coming in.
Okay, Yatin, thanks so much for joining us. Let's get in all the technical views on the market. Abhijit Phatak of Definedge Solution joins us on the show right now. Good afternoon, Abhijit. Firstly, a view on the markets. The Nifty's managed to slip back into the red. The Nifty Bank has managed to hold on by a gain of almost 180 points. What strategies? What's your view?
The Nifty is in a short-term uptrend, but there's a big resistance near 10,400, 10,450 spot, which is there is a gap over there. So unless it closes about 10,450 on the spot, it's a bit dicey right now. So one should be hedging their positions if carrying longs overnight. And on the lower side, 10,250 is a support. So as long as that is held, the uptrend will remain intact.
Okay, I think, Neeraj, before I hand it to you, I want to point out a few stocks. Pull up HCL Technologies, and it's falling and falling fast. It's down now 5%. IT as a pack has been weak. HCL Tech has been at the lowest point of the day. Pull up the other IT counters. Pull up TCS, Infosys, and Wipro. Let's see what they have managed to do. Yes, TCS has managed to recover from the lows of the day. Pull up Infosys, and the other pack I want to address is Ujjivan and Equitas. Now remember a few days ago how they had cracked and gone below their price. Look at the moves that have come in. Again, back above the 225 mark. Equitas was somewhere around 80 levels or 90 levels, if I believe it right. It's at 116. So smart moves, 20-30% gains without anyone realizing has already come into conquest. Yeah,
it's just coming out of the blue right now, or rather coming under the notice right now. But a quiet moves the last couple of days. I remember Franklin Templeton as a house bought into Ujjivan for 2 days on a trot, which is Friday and Monday, at lower levels, substantially lower levels. Now, maybe actually, Abhijit, before we talk about your stock ideas, let's talk about a couple of these pockets. I remember you at the start of the month of October predicting about IT and what it could do. It turned out that way. At the start of November, how does IT look like? Because it's, the interesting part or the curious part about the Nifty IT movement the last 5 sessions is that on days when it makes a move, either on the upside or on the downside, it makes these really large moves. 4% on the upside, 3% on the downside. How are you looking at this IT space right now?
I expect IT to remain sideways in this month of November. May not be too much of upside. In fact, Infosys, I had a target of 700 for the pullback, which it almost did yesterday. So there is a resistance of 700, 705 on Infosys. It will be strong only if it crosses that. Again, on the lower side, 630, 640 is a support. So it might remain range bound in this band. Same way is the case with TCS and Wipro. There is a band of about 5 to 8% in which they might remain range bound for the next maybe a couple of weeks.
Okay, Abhijit, what about Ujjivan and Equitas? Some smart
I don't
bounce.
track Equitas, but I track Ujjivan, and Ujjivan has given a very strong bounce and it is really looking good. And I wouldn't be surprised if it goes past 250, if it closes about 220 today.
Well, interesting. Okay, now let's talk about some stock recommendations. Abhijit, you've given us your index view. What about specific stocks? What are you recommending?
Yeah, I am bullish on, in fact, I am still bullish on many stocks. Although I said Nifty is at resistance, I'm not seeing any bearish stock ideas. So till the time we get stopped out, we need to play bullish as only. So Just Dial is a strong stock with a stop loss of 495. It can be bought near right now, maybe 505. And it can go towards 540 and maybe even 600 if the market favors it. And second stock is Ambuja, which is showing a reversal, and if it can be bought here again near 196, 198 with a stop loss of 188, even Ambuja can give a 10% move in the next few weeks, maybe 220, 230 kind of move.
Okay, hold on, Abhijit. We have a management waiting. Welspun Corp has reported a stable set of numbers in the second quarter and could have been even higher if not for a provisioning on the account of an exposure to IL&FS. Nikki got to speak with Vipul, Mathur, the MD and CEO of Welspun, and I started by asking him about the verticals that aided the numbers into the conversation.
this quarter performance has been an exceptionally good performance. We have been able to log in on a 7% growth on a Y-on-Y basis, and almost 9% growth on a Q-on-Q basis. Our EBITDA is around 239 crore rupees at a sales of 260,000 metric ton. What is also significantly important to highlight here is that we have now an order book of almost 1.7 million tons, valued at almost $2 billion, and this is the highest ever in the history of the company, which gives us a sort of a platform for a very, very robust performance over the next few quarters. The reasons for this higher EBITDA has primarily been the mix of the orders, what we have been able to book and what we have been able to execute. And as I have been always maintaining that, that as the quarters will progress, the blend of healthy orders would start coming into play. And that is how we would see an incremental growth in the EBITDA. And this is what is clearly a reflection of that.
Sure, I'd like to understand a little bit going forward in the next quarter, are we expecting some kind of impact further coming in on account of these adjustments that you have made towards the provisioning related to the IL&FS bonds, or this is the quarter where everything has been adjusted and taken care of?
No. So on the ILFS side of it, we have, we did a complete due diligence, and as what was recommended, we have made a provision of 18.5 crore rupees in this particular quarter. And then there is also a provision of something around almost 10 odd crore rupees towards mark to market for the other bonds. So all put together, we have made a sort of a provision for 28 crore rupees in this particular quarter. And that is what is getting reflected in our reported EBITDA at this point of time. Moving forward, we would like to watch the way the market is going to react and on this ILFS thing, and we would definitely take a call sometimes in this particular quarter as to how this thing to be treated in our books in the coming quarter.
All right, so I'd like to talk a little bit about your order book position right now. As you said, it was the highest ever at 1,720K MTs. That's around 148 billion. I'd like to understand which is the geography which is contributing the most towards this order book, any particular type, and also what growth can we estimate going forward from such geography?
So if you see this 1.7 million tons of order book comes from, is a combination from all the three geographies. All put together, it's around 850,000 tons or 870,000 tons actually coming from Saudi, almost 500,000 tons plus coming from US, and almost 300,000 tons plus coming from India. So it's a mix of both. So all in all, if you see, all the three geographies have a sort of a very, very robust book order position at this point of time, especially the Saudi as well as the US, where they are booked for at least 4 or 5 quarters ahead. And the growth, primarily if we see, the growth is mostly coming out at this point of time is mostly coming out of the US market, and where our large presence and our leadership position in that particular market, we have been really able to capitalize upon it. We will see that trend continuing forward as well.
All right, that's...
No, I just wanted to highlight the rupee, and we were just discussing it. Look at how it's managed to come down to the lowest point of the day. The rupee is actually appreciating against the dollar, and that's why there is selling pressure that's been seen on IT and pharma. So most of the IT stocks, we spoke about HCL Tech, but remember Tech Mahindra, Infosys, all of them are trading pretty much near the day's low. So there is selling pressure that's happening, and pharma as a pack is not doing well. Pull up Lupin, pull up Sun Pharma, they are also trading at the day's low. So their rupee impact certainly being seen in some of the counters. Titan and Hero MotoCorp have moved to the highest point of the day, and so has Yes Bank. Yes Bank is now up almost 9% above the 205 level.
Well, so smart moves there, and I think maybe primarily because I think we and Darshan were talking about it, the currency strength could be one factor why the Nifty IT has some big moves in the session today as well. But a big pullback, 73.50 and counting. At some point of time in the show, we'll get in a currency voice as well. In the meantime, Nipun Mehta joins in right now with his thoughts. Nipun, good having you. Thanks so much for joining in. What's the view on the IT names? Today's moves could well be linked to what's happening in the immediate pullback on the currency, but what happens over the course of the next couple of months? would there be anything that you would want to bet on within the IT space?
Good afternoon, Neeraj.
Good afternoon.
Yes, I think the short-term moves typically have been happening on the basis of how the currency moves. But when one looks at the kind of quarterly results and the kind of growth that some of these IT companies, you saw one coming out yesterday, over the last couple of weeks, you've seen all the large cap IT companies coming out with good growth projections, fairly confident management commentary that has been there. Our sense is probably you could see probably a greater run-up happening as far as large cap IT is concerned in comparison to mid-cap IT. Some of the mid-cap IT companies have had a reasonable run-up. There is that clear differential rating that is there, discounting that is there between large cap and mid-cap now. I think justifiably so, given the kind of gradual slowdown that we had seen as far as large cap IT is concerned, depending on which geography that they operated out of. And coming out of the fact that in certain cases BFSI or telecom had been order flow had been relatively slow, but I think that seems to have clearly changed. One would want to bank on large cap IT going ahead. Currency movements is something that's probably likely to be only short term, but on a longer term basis, I think the space is something that needs to be looked at.
Nipun, what do you make of the auto space? Maruti is trading at the highest point of the day. Numbers not the most impressive, but still there is traction in counters like Maruti and Hero. What do you make of them?
So clearly, whatever price fall that we've seen in the short term is reflective of either of higher fuel prices or absence of lending coming in from NBFCs, and due to which even during the festive season last month, we really didn't see encouraging sales figures coming by. Our sense is as the money market comes back or has back its confidence, as you see more greater liquidity coming in as far as NBFCs are concerned, that lending has to restart against both two-wheelers and the four-wheeler space. So lower registrations or lower sales coming by for 1 month is not something that should have an indication on the kind of sales that could be happening going ahead. Yes, probably to an extent we've seen margins under pressure for some of these companies, particularly two-wheelers as well as four-wheelers, passenger vehicles particularly. Our sense is, given the kind of discounts that some of these companies have been giving, margin pressure could continue for some more time. But when you look at sales figures, our sense is once the liquidity in the NBFC space over
Nipun, please allow
Nipun,
allow me to come in. Nipun, allow me to come in simply because some news on the screen. HDFC numbers are out, and the net profit on the face of it looks better than what the Bloomberg estimates were. 2357 was the estimate. It's come in at 2467, and that's why the reaction on the stock, flash in the pan reaction, I must add. Let's give this time to settle before reacting too much. The reported numbers, the PAT numbers seem to be okay. I doubt that the asset quality would have seen some material deterioration otherwise, so might not be too much of a cause for concern. Waiting for the NI numbers to come in as well, but the reported numbers on the bottom line front certainly seem to be well and truly above estimates. At 2467 crores, this would mean what, a growth of 16 or 17 odd percent, which is much better than the 12% growth that the street was working with. So, well, one more reason for the NBFC to be up today. It was up about 5% in trade yesterday because a bunch of housing finance companies were up in trade in today's session as a result of these numbers. Just a bit of a positive knee-jerk reaction. In a bit, we'll of course hear from the management as well, talking about the numbers. KK Mistry would be addressing the media, but the numbers on the face of it, at least the bottom line number, we don't have any other numbers, but the bottom line numbers look reasonably impressive. I don't know, Darshan, if you have other numbers or no?
No, I don't, because they give the NII number in the press release. That's not been uploaded yet, so that's something that I'm looking at. I don't have that at this point of time. Okay. But we can try to calculate the...
Yeah, so while we do that, Nipun, just an initial thought. I mean, yesterday PNB Housing Finance showed that money is available for the AAA rated or better coupon paper. HDFC would obviously fall in that category, and the fact that they've come out with a reasonably strong set of numbers.
I think very clearly, not just is money available to some of these, and HDFC obviously is the biggest name, so clearly funding would be available at cost of funds, which will be only very marginally higher than what it would have been earlier. So yes, access to funds and the fact that the entire industry had to a degree slowed down lending against housing is something that would continue to benefit a company like HDFC. So really no surprises in terms of if there is this kind of a jump that has happened. Really no surprises in terms of how top line growth as well as profitability has gone up.
Okay, let's talk about the numbers. Nipun, stay on. Avinash Gorakhshekar of Jointer Capital to talk about the HDFC numbers. Avinash, okay, the revenue numbers notwithstanding, the bottom line numbers seem a lot more impressive. Avinash, just that one number right now, waiting for the other numbers to trickle in. But what do you make of this reported net profits?
I think number seems to be on the face of it, Neeraj, seems to be quite, solid. In fact, our sense is that possibly, one would like to know overall what has been the NII and the kind of asset quality, because clearly, despite the fact that HDFC is one of those companies which has the least amount of exposure to IIFL, I think asset quality number on a sequential and on a YY basis would be important to watch out. But overall, I think this number initially looks to be good.
Okay, there is a sale of investments to the tune of 1,000 crores that has added to the bottom line. The reported NII that we are getting is close to 2,600 crores. The estimate was close to 2,900 crores. So we need to, that's the calculated one. The reported one is something that we need to watch out what HDFC will give out. We don't have that number yet. Neeraj, do you have anything?
But hey, if that is indeed the number, and if there is a large one-time benefit as well that has come in because of one-offs and which could have impacted bottom line as well, then maybe the numbers slightly sketchy compared to what the street would have been working with. Avinash, would there be factors that, or would the market look beyond Q2 if indeed the reported NII number comes in very, very flattish versus a 12-13% uptick that the street was working with?
I think, I would believe that at least 10 to 12% growth was definitely expected. And I think this exceptional other income is definitely, on expected lines. I think the money is on account of the HDFC AMC issue. So I think broadly, the other income factor is more or less, factored in. But I think the NII, if it is flattish, is definitely not a good sign. We were personally expecting at least a 10 to 11% growth on the NII front. So I think definitely growth, has to come in. If that doesn't come in, then definitely there's a slight amount of disappointment here.
Lalitabh Srivastava of Sher Khan with us on the phone line as well. Lalitabh, what have you made of the numbers? We have the PAT numbers, we're still waiting for the reported NII number from HDFC, but if you've been able to get a hand on that, what do you make of these two numbers?
Yeah, PAT numbers are largely, slightly better than expectations. There was a one-time benefit of a stake sale during the quarter. So 1,000 crores benefit has come from that angle. But if I am seeing the loan growth number, I think that is, on a sequential basis, that is not very encouraging. That is flattish. Which is why you are seeing the NII is also slightly, lesser than what we were expecting. So I think, at these times, maybe, the NBFC is looking to have a cautious view on the growth side. But on the bad side, I think that performance is better than expectations.
Okay, there is, Lalita, there's an impairment of financial instrument cost, which is close to 400 crores. That was just 20 crores in the last quarter, and that was a negative 60 crores. Any idea what this could be?
See, this would be an MTM loss that they have taken. Because now they are in India, so they are reporting this line item. I think this would be an MTM loss.
Okay, what's the call or is the pecking order, Lalitabh, on the back of these numbers that you've seen thus far, and assuming that there are no big hidden spots within HDFC, what are you doing in the housing finance space now?
See, housing finance space, we are cautious. Some numbers that I would be waiting for HDFC is, first of all, what is the stage 3 assets, and secondly, how the NIMs have behaved. My understanding is that NIMs are flattish from sequential basis, and that would be slight disappointing because, even last quarter the NIMs had contracted from the long-term average. So these are the two numbers that I would be looking out for, and asset quality, as I said. On the housing finance segment and on the NBFCs, we are having a cautious view at present. For HDFC Limited, because this is one of the
just hang on, Lalita. We'll have to cut across. Keki Mistry started speaking.
So good luck to all of us. The board met a few minutes ago and we approved the accounts for the quarter ended September 2018 as well as for the half year ended September 2018. So I thought what I'll do is spend the next 15 to 20 minutes briefly summarizing some of the key features relating to the accounts, and then at the end of that we can take up any questions that you may have. Our disbursement growth in the aggregate for this period was 20%. And the retail disbursement growth was 17%. On an AUM basis, that's on a loan book. The loan book, as you know, we sell loans. So on an AUM basis, the total loans outstanding stood at 4,30,210 crores, which represents an increase of 17% over the previous year. The individual component increase was 18%. The non-individual component increase was 13%. So the bulk of the growth really came on individual loans. During the quarter, we sold loans aggregating to 6,059 crores, and in the last 12 months, we have sold loans aggregating to 15,773 crores. Had these loans not been sold, then the growth in the individual loan book would have been 25%, and the growth in the total loan book would have been 22%. In respect of the loans that have been sold, which are not part of the loan book but are still part of the assets under management, the total aggregate amount now works out to 50,414 crores. So we have 50,414 crores of rupees of loans which have been sold by us, where we continue to service the loan on behalf of whoever has bought the loan. Our trust on the affordable housing market continued to remain strong. In terms of numbers, 37% of the loans that we did were to borrowers who would fall within the economically weaker section or in the lower income group. And in terms of value, in terms of amount, that amount would be 18%. So 37% in numbers and 18% in value of the loans we did were to borrowers who are in the economically weaker section or in the lower income group. On an average, every month, we approve about 8,300 loans to borrowers in the economically weaker section and in the lower income group. Now, within the economically weaker section and the lower income group, the average loan amounts vary. So for HDFC as a whole, the average loan amount for new loans we given in the current year has been 27 lakhs. For borrowers in the economically weaker section, the average loan that we gave in the current year was 10.1 lakhs. And for borrowers in the lower income group, the average loan amount was 17.6 lakhs. And as I said earlier, the total average is 27 lakhs. If we break up the loans outstanding on 30th September between the different categories, individuals, corporate, construction finance, lease rental discounting, you'd find that 73% of the loans are in respect of individual loans. This compares to 72% a quarter earlier, so that proportion has gone up. Individual lending has gone up during this quarter. 73% is individual loans, 12% is construction finance, 9% is lease rental discounting loans, and 6% is corporate loans. If you look at the last 6 months and look at the incremental growth, then 81% of the increase in the AUM is in respect of individual loans. So as I said earlier, the bulk of the large part of the growth in the first 6 months of this year has come on individual loans. So 81% is individual loans, 13% is lease rental discounting loans, 4% is construction finance, and 2% is corporate loans. We continue to hold all the investments in our subsidiaries and the bank at historical cost. The unrecognized profits, the unrealized profits on the listed investments, which is the difference between the market price of the shares and the carrying cost on 30th of September stood at 1,69,744 crores. So we carry a huge amount of unrecognized gain on our listed investments, and this does not include, this figure of 1,69,744 does not include the unrecognized gain on our unlisted investments, because obviously companies like HDFC Ergo or HDFC Credila are not yet listed. Capital adequacy is a very comfortable 18.4%. Of that 18.4%, Tier 1 capital stands at 17.1% and Tier 2 capital stands at 1.3%. So capital adequacy has gone up largely as a result of the fact that during the quarter we had these warrants which had been issued, and the warrants got converted into shares during this quarter. Gross non-performing loan number came down by 5 basis points compared to what it was in June. In June, the gross non-performing loan number was 1.18%. In September, the gross non-performing loan is 1.13%, 1.13%. And if we break up that 1.3% between individuals and non-individuals, individual non-performing loan stands at 66 basis points, exactly the same as it was in June, and non-individual non-performing loan number stands at 2.18% compared to 2.32% in the first quarter.
Okay, that's the management of HDFC, and the numbers coming in line with what was estimated. Titan is at the day's high, and other counters that have done well is Power Grid has managed more. Nipun, any view on these consumer companies? A lot of the FMCG companies managed to fall 20-30% from the recent highs and now are seeing a little bit of recovery. Any view on those?
So we've had a reasonably mixed bag of results if you look at most of the FMCG companies. There was one that came out yesterday which wasn't very positive. The results weren't great. We've had earlier some of the FMCG companies showing a reasonable amount of growth that is there. Given the high valuations that are there, our sense is they might not be market outperformers, but there's a clear top-line growth that we are seeing. Whether you look at the urban markets or rural markets, or the change in strategies that some of these companies have been doing in order to ensure or capture greater market share, I think clearly FMCG will be one of the preferred sectors that is there. Like I said, might not outperform as far as markets are concerned, given the relatively high valuations that are there, but should be very clearly featuring in, at least among the within the FMCG space. At least the top 2 companies should be featuring within the portfolio.
Okay, Nipun, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Really appreciate your time today. Okay, well, a lot of discussions yet to be done. Let's get in Hadrien Mendonca of IIFL on the show as well. The markets are absolutely flat right now. Hadrien, is there an index trade at all, or would you rather focus only on stocks?
No, absolutely, there is an index trade, but this time it's on the Bank Nifty. Now, if you see the Bank Nifty monthly chart, it has formed a doji pattern, which is a small positive development, indicating that the fall that we've seen in the past 2 months can get arrested around these levels. If you come down from the monthly to the smaller time frame charts, we are seeing an inverse head and shoulder pattern breakout. So I think Bank Nifty is an index that one can trade. In fact, can go long even at these levels. Projections of the inverse head and shoulder breakout are indicating that we could see Bank Nifty heading towards the 25,800, 25,900 zone in the coming days. On the downside, your stop loss should be strictly at 25,100.
Okay. Now, what about specific stocks for the day, Hadrien?
Yeah, so one is Axis Bank. We're long on Axis Bank because of the sheer momentum and the volume participation that we are seeing. I think the stock is all set to move even further from here on. We're expecting a short-term target of 620 on an Axis Bank, keeping stop loss at 590. Second stock that we are bullish on is Kajaria Ceramics. Again, the stock is showing a very good momentum. It has surpassed its short-term moving averages. We are expecting a short-term target of 425, keeping a strict stop loss at 402.5.
Okay, in the midst of HDFC earning, we missed the numbers that came out from Marico. In-line set of numbers, 20% top line growth, 1,837 crores is the top line, versus our estimate of 1,780 crores. EBITDA is slightly in line, 16% versus expectation of 16.2. Even the core EBITDA number is decent, and profits coming in at 218 crores. The estimate was close to 207 crores. It'll be interesting to see what happens now, because copra prices have fallen significantly. So management commentary will be much more important than seeing the pure financials. How much leverage they will get in because of cost materials going down. So that's something that we need to watch out.
Yep, maybe quarter 3 and quarter 4 become a lot more important for Marico. We'll talk about all of that. But Hadrien, Abhijit stay on, so much more to talk about. Starting today, we are in the run-up to Diwali. We are going to get you top Diwali ideas from key brokerage houses. We start off with HDFC Securities. Joining us today to discuss their ideas is Deepak Jasani, the head of retail research at HDFC Securities. Deepak, good having you. Thanks so much for joining in. Let's start off with the first one, and that is Apollo Hospitals. I believe the call that you're giving to your clients, and indeed everybody else, all our viewers as well, is that people can buy and add on declines. Can you explain the rationale here?
Yeah, good afternoon. The rationale behind Apollo Hospitals, basically, it's a well-known company, one of the premier healthcare companies in the country. The company has undergone a lot of underperforming 3 years. The period where it had done a lot of capex in its pharmacy business, in its hospital business. So as a result of which it suffered in terms of the top line, the profitability, and also the return ratios. Now, I think that period of investment is coming to an end. The pharmacy business has started to do well. It is constituting 40% of the revenues, and it's growing at 24% CAGR. It has turned EBITDA positive. The hospital business also now will inch up in terms of occupancy ratios and in contribution to the revenue and the profit. And so overall, I think having regard to the fact that the stock has not performed so far, but has all the things in place for a good performance going ahead, we thought this is a good pick. And typically in all our picks, we sort of advise that the investors should buy some quantity at the current price, and in case the stock price falls to a particular band, then they should add in that band, and then hold on for expecting the target to be met over the time horizon that we have mentioned.
Okay, the next one is Cummins India, and it's a stock that has been in focus the last 2 or 3 sessions, some long positions out there. The results have been strong. Are you comfortable, Deepak, to tell your clients to go out and add a Cummins India or buy a Cummins India at current levels as well? And again, do explain the rationale for Cummins.
First, let me clarify that the results of Cummins have come out after the issue of our reports. So when we issued the report, the stock price was 676. Now, of course, it has moved up post the results. Now, Cummins, as a lot of us know, is a 51% subsidiary of Cummins of USA, leading manufacturer of diesel engines used in generators in India, having 8 manufacturing facilities in Maharashtra and Gujarat. Now, the introduction of newer solutions catering to the demand from mining, industrial, railways, etc., will lead to good revenue visibility for the company. The exports from the company are going up due to support from the parent. The domestic business also continues to do well. As a matter of fact, in the latest quarterly numbers, the sales growth came in at 30% for the whole company, and the sales, the absolute number was the highest ever quarterly numbers for the company. Now, this is split up into 34% growth for domestic and 21% for exports. So both the businesses continue to do well. As a matter of fact, the company has revised the guidance upwards today itself. So I think if one is banking at an industrial and infrastructure revival in the country, Cummins is one of the best places to be in.
Okay, the next one is Dr. Reddy's that you like, and you have a target price of 29.52 on the counter. What's the rationale for liking Dr. Reddy's?
Now again, Dr. Reddy's, the results came out after we issued the report. So when we issued the report, the price was at about 2,532. Of course, there was a negative news also post the results in terms of Form 483 being issued in terms of for the Vizag plant with 8 observations. So basically, Dr. Reddy's again is a quite well-known company. It is a vertically integrated pharmaceutical formulation manufacturer, diversified manufacturing footprint across many countries, 42% of the sales coming from US, a lot of ANDAs and new products to be launched abroad as well as in India. India's market share, they are trying to bring it up from 10% to 16% over the next 1 or 2 years. It has also done a lot of cost rationalization in terms of streamlining its cost, selling 2 of its units or businesses in the past 1 month. So basically, the company is aware of what it needs to do post the past few years, where the whole sector has undergone some sort of a derating due to the FDA-related issues and the continuous fall in the generic price. So now I think things are falling in place for the company, and even the Chinese market is now being opened up, and Dr. Reddy's is one of the first movers to get into that country and take the benefits out of it. So that is the rationale behind Dr. Reddy's.
I just have one query on Dr. Reddy's. If you saw the numbers, the US markets didn't do well. It came in almost $20 million lower than what was anticipated. In the management conference call, they said that they don't have any clarity on Suboxone because that is under litigation, and for Copaxone as well as Nuvaring, the launch probably will be in the next fiscal. So probably till FY20, there are no major launches that Dr. Reddy's has. So are you sure that they will be able to? So how do you see the US markets growing up, because that's the key market for them?
Yeah, the management has earlier said that FY19 will be a challenging year, but so far in their HY numbers, there doesn't seem to be too much challenge in terms of the growth in the bottom line, at least, if not in the top line. So I think the management is being a little conservative, trying to bring down expectations, and in the past they have sort of done better than expected in most quarters. So I think we will try to keep that hope, and based on that, we think the company may do well and achieve the projected targets.
Okay. Cyient is the next one, and interestingly, you've chosen an IT stock. Why this one amongst all the others available?
Yeah, so if you will notice, we have chosen large cap stocks in many other sectors, and in IT we have gone for a mid cap stock because the large cap stocks, even at these prices, are attractive, but the risk reward or the potential upside may not be as large as a mid cap IT stock, especially Cyient, because Cyient at these prices is also quoting quite attractively at just I think 12.5 times FY20. So in that sense, and it is into niche engineering R&D space, having made some 6 acquisitions in the past 3 years, trying to give a complete suit to its customers in terms of the segments it is into. The order intake is also quite healthy, and I think at these valuations there may not be much downside surprises.
Okay. Lastly, ICICI Bank. Again, the same question. Why an ICICI Bank over an HDFC or a Kotak, or if you're taking corporate-facing banks, why not an Axis Bank?
Yeah, we like Axis Bank also. It has been our pick of the week, one of the pick of the weeks in the past 3 months or so. ICICI Bank, HDFC Bank, of course, we cannot recommend. We thought ICICI Bank is a good pick, mainly because all the recent problems that it has in terms of on the one side about the book, the NPAs, the slippages, the way the provisioning has been made. Now those seem to be coming to an end. Further slippages may be in control. On the other hand, the top management issues are also now resolved. The new managing director now has a focus towards portfolio quality and strengthening of the underwriting credit processes Now, this will mean a prudent growth path for the bank. And compared to the other corporate facing banks, I think this is available at a much cheaper valuation. People were keeping away from this bank as well as Axis Bank so far because of the NPA issues and also because of the top management issues. Now, both the issues having got resolved, I think one can take a bet that these two banks, especially ICICI Bank, will do well going forward.
Okay, Deepak, Jasani, we'll leave it at that. Thank you so much for taking the time out and being with us today, and doing you and your team at HDFC. Well, happy festivities and a happy Diwali.
Thank you. Thank you.
Thank you, Deepak.
Neeraj, HDFC has just released the reported NI number, much lower than what was anticipated. The estimate was 2,965 crores. That's the Bloomberg consensus estimate. And they have done 2,590 crores. So that's a big miss coming in on HDFC. And you can see the counter has now slipped into the red. So, so the NII is a big miss. That's the only thing that was missing. That was not their part of the income hit. That's come in the press release. And that is something.
It's actually a degrowth.
Yeah, it's not done well, because last year it was 2,600 crores. It's not done well. The growth expectation was of a growth. That's not come in, so not the best of nine. And you've seen how housing finance companies have reported numbers. So yeah, that's my view on it.
Yeah, well, the only question mark is whether large firms are consciously going slow on lending in the current scenario, and whether that will last for the next couple of quarters or not. At some point of time, we'll have a conversation with KK Mistry and try and figure that out too. Speaking of that though, actually, Abhijit, Phatak, on the charts, HDFC, a pull up, a move up and then a pull down too. Would you trade it?
Yes, not here, but on any dip, if it is available near 1740, with a stop loss of 1700, 1710, it can give a move above 1800 as long as 1700 is held.
Okay, we were actually going long on HDFC. Fair call. Hadrien, a couple of nifty names, and excuse me if you already gave them as calls, but the two top gainers, Yes Bank and Hindalco, do you have thoughts on either of them?
Yeah, Hindalco specifically is showing a very good up move today. In fact, this move is aiding the stock to surpass its long-term 200-day moving average. It has been unable to do so in the past 4 to 5 days, but today is the day where it is actually happening. Thirdly, we are also seeing a good strength in the relative strength index, which is one more indicator which indicates that Hindalco has all the potentials to move higher from here on. So Hindalco, if someone is looking to go long, one can consider going long. We're expecting a target of close to 240 to 243 in the near term.
Okay. Time now to try and find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. The first stock on my list is actually Vatek Vabag. We have spoken to the management not too long back, and they had mentioned about the order pipeline coming through in the next couple of quarters, and a big order of about 1,000 crores coming in from the Middle East, on the back of which we are seeing about a 6% gain there. United Spirits came out with a strong set of numbers, up about 8%. Revenues came at close to 2,200 crore rupees, a 69% growth in the bottom line, while margins expanded by almost 300 basis points on a year-on-year basis. So overall strong set of numbers, and United Spirits is looking good. KEI Industries is up about 13.5%. Apart from a decently good set of numbers, the company has also approved a planned expansion of their capacity by 3 lakh kilometers per annum for a total investment of about 55 to 60 crore rupees. The company says that they will fund it through their internal accruals and would get them total revenue on an annualized basis of about 300 crore rupees. The last stock I want to highlight is Escorts, which is up about 8%. Good decent sales in the month of October, 29% growth in volumes, with strong growth seen in the domestic as well as exports business. Back to you, Neeraj.
Okay, thanks a lot for that, Yash. So that's the Fab 4 stocks of the day. Just a quick perspective on the currency as well, because frankly, while we're talking about the index, which is lying absolutely flat, the rupee's been the big mover, 73.56. In fact, at a point of time, climbed above the 73.50 mark. Quick perspective from Bhaskar Panda of HDFC Bank joining us on the phone line. Bhaskar, good having you. Thanks for joining in. Couldn't quite fathom the reason, but is it, what's led to this sharp intraday move today? Any thoughts?
So do I. I think everybody is surprised. See, 2-3 things has happened. One is oil prices have remained more or less quite, benign and stable. Second thing is that the dollar index has a huge sell-off in the post-European session. And third is that if you look at USD CNH, that has a huge movement against the dollar. So these three are the basic reasons, and I believe that there has been some kind of stop loss sales. So these four together has brought about this change today. But going forward, I really don't know. I mean, whether it will break 73.50 and go towards 73.30, it's very difficult to say. I don't think it is going there. It will remain in a range kind of thing.
I reckon the move sub 74 yesterday is also out of the question unless things change materially?
74 is there. Anytime it can come. But what I'm saying is that 74.40, which we had seen earlier, is a kind of top for the time being. Therefore, dollar rupee might continue to be volatile within say broad 73.30 to 74.40 kind of range. Within that, it will play. Both the resistance and the support will remain quite strong at this point of time. I don't see that breaking.
Fair call. Bhaskar Panda, really appreciate you taking the time out and joining us and giving us that quick perspective. That's the view from Bhaskar Panda of HDFC. By the way, as we speak, I'm just trying to figure out, and before we get in Mayuresh Joshi, stocks that have had some gains in the last few minutes of trade. So last 10 or 11 minutes of trade, Somani Ceramics has had a sharp uptick. Mind you, the volumes would be a bit suspect here, but nevertheless, the stock has inched up in the last few minutes of trade. There you see a sharp bump up there. Texmaco Rail is the other one, and BEML up about 8% now in the session today, but a big move in the last few minutes. I mean, like an additional move in the last few minutes of trade, so up about 8% too in the session. So good going really for these names as well. Good time to get in. Mayuresh Joshi of Angel Broking joins us right now on the show. Mayuresh, thanks so much for joining in. Seems like people thought Yes Bank was worth putting fresh money in at 175, 180. The stock has had a merry run the last couple of days.
Oh, it has, Neeraj. And again, I think the expectations largely are now getting built on the kind of management change one perceives over the next few months. I think with a whole host of issues surrounding the management first, what probably happens in terms of asset quality, where the fears have probably got allayed in terms of the numbers that they have posted. Though I think the CET1 ratio still remains a little bit on the lower side. The capital raising plans and what the new management does when it does come on board over the next few months would be interesting to watch. So yes, I think at around those 170, 180 levels, I think valuations indeed have become very, very attractive for the bank.
Okay, Mayuresh, what did you make of L&T's numbers? The entire cap good space this time around has come out with strong set of numbers, be it a Cummins or an L&T or even an ABB. Is the tide turning?
So I'm not too sure whether the tide is turning, Darshan, but numbers have been very, very impressive for all these counters. And even if you look at the segmental breakup for L&T, if you leave aside the power segment, the infrastructure segment is the only segment where the margins actually compressed a tad bit because of certain cost escalations. But the order book remains extremely strong. And though the perception as the management has put forth, because of elections, I think there will be front loading of orders. So traditionally, as we see strong orders getting reported, at least on the domestic E&C part, I think they might remain a little bit muted. But a large element in terms of how the execution has panned out has got effectively reflected in the top line, which was a beat. Again, the margin performance was exceptional in my opinion, and that led down to the bottom line growth. So I think the entire percolation right from top down to the margins reflected in the bottom line for the company. Strong order book again, hydrocarbons expected to do well. Heavy engineering again, I think the EBIT margins were quite reasonable in my opinion. And again, I think the other sum of parts in terms of valuations of their other investment companies, I think that does add value to the company as well. So yes, I think results were very, very impressive for L&T, but I think the other cap goods company, Darshan, also reported very reasonable set of numbers. So ABB, for example, I think 11,368 crores order book. They delivered around 10,700 in terms of top line last year. So again, I think with the kind of execution that they've got and expectations of these margin orders actually improving their overall operating performance, My own sense is that execution is improving for most of these cap good companies, and that is clearly getting reflected in terms of how the numbers are panning out. Q4 might be a little bit sluggish in terms of order flows, so I think the street will have to take cognizance of that fact and recalibrate earnings in terms of annualized numbers for this fiscal. But again, I think next fiscal will probably be far better for them in my opinion. So yes, I think being selective, but ABB, L&T would probably stand out.
Okay, just before we go into the what dealing rooms are indicating, pull up Manappuram Finance has cracked from the highs of the day. It was trading at up by almost 8 points, and now it's trading down by 3%. So there is a selling pressure that's been seen on the counter. But 3:15, Yatin joins us to tell us what dealing rooms are indicating.
Darshan is not joining us, so I'm the one who is joining. So dealers, Marico, they came out with their earnings, stable set of numbers. But more importantly, if you look at it on a sequential basis, or if you look at it from the year's high basis, copra prices are down nearly 30%. And probably that would aid a company like Marico, which is heavily dependent on copra as a raw material. So dealers on the on a positional basis does expect next quarter to be stronger. On a positional basis, they are recommending a buy on Marico. Vedanta, on the basis of trends, dealers recommend a BTSC strategy. And do watch out for the entire IT pack. We have the likes of TCS and HCL Technologies, all of them witnessing some kind of selling pressure. Dealers do indicate that for select technology stocks, FIs are set to be sellers in today's trading session.
Okay. Well, certainly seems to be the case that there has been some selling. Yatin, thanks for putting that into perspective. HCL Tech right at the top of the pile when it comes to the losers, and then pharma too. So I don't know if it's got to do with this currency move that all the exporters are getting pummeled out of shape, but there is certainly weakness. We've been stuck on IT. What about pharma? And Abhijit, the likes of Lupin, Reddy's, Cipla, at the current point of time, 14 minutes left for trade to close. Can you initiate a fresh trade into any of the pharma names?
To be honest, most of the pharma stocks are looking weak to me, and maybe Cipla can be a good shot with a stop loss of maybe a couple of % higher than this current price, and that's looking quite weak to me, Cipla.
So you would go short on a Cipla. Hadrien, anything in pharma that you would go short on?
No, I would stick to the remaining long, and the stock is Torrent Pharma. I mean, you missed on taking Torrent Pharma's name among the 4 names that you already took. So I think Torrent Pharma is looking pretty strong at current levels. We are seeing good momentum build up, good volume participation, good relative strength. So all the parameters are really indicating that Torrent Pharma still has some legs to go higher from here on. So I think one can initiate long on Torrent Pharma. You're expecting a short-term target of close to 1800. Short-term in the sense, I would give it a 2.5 weeks as a delivery call. On the lower side, I would expect traders to keep a stop loss close to 1695, 1698.
Okay, 2 auto sales numbers that have come out. TVS Motors has just come out with numbers, 3,98,000 units above our estimates. Our estimate was 3,90,000 units. It's come back into the green. And Tata Motors, 57,700 is the sales that have come in. Our estimate was close to 65,000 on an overall basis. So I'll try to get in what's more on these numbers, but these are the numbers that we have. And just to add on to pharma now, Dr. Reddy's has slipped to into the red. The only standing boy on pharma which is doing extremely well despite all the pressure that is there is Divi's Lab, trading at lifetime highs. It's above the 1500 mark. Hadrien, Divi's Lab, any view?
Yeah, absolutely. It is one of our favorites, and we've been long for the past 2.5 months now. With a disclaimer that we have also recommended buy to our clients. So I think we have a medium-term target of 1645 on a Divi's Lab. So without a doubt, continue to hold long positions, and 1645 is that we are expecting.
Darshan, just want to highlight Escorts, because while we were talking about auto sales numbers, I just thought I was looking at the stock price of Escorts and want to get the graphic dashboard on the wall before we talk any further. But just pull that stock up on the graphic dashboard and just see what's happening here. It's a very interesting move that we've seen on Escorts today. Firstly, the price move. So the 7.5% uptick that we're seeing in Escorts today, it's trading near around the highest point of the day. 2 things. One, the management call indicated that they are confident about the numbers looking strong. So October was a good month, and they mentioned that November 2 could be a good month. Not revising guidance higher or otherwise, but the numbers might continue to look strong. And the quarterly numbers that came out weren't disappointing either. And post these numbers, while the stock has corrected a little bit from those highs that it used to trade at about 3 or 4 months ago, and maybe a bit of a discount to peer average. So the sell side very bullish on Escorts, 14 buy calls, 2 hold calls, not a single sell call. And the average price, the 12-month target price average is about 970, which leaves significant room for upside as well into Escorts should somebody want to go out and buy it. Not recommending that. Mayuresh will be best placed to talk about that, but certainly looks like a stock to reckon with today, amongst the best performing tractor names or auto names in the session today. Mayuresh, from all the auto sales numbers that we were talking about, want to specifically quiz you on Escorts. What did you make of the numbers? What did you make of the monthly numbers of Escorts, and what's the call on the stock?
So Neeraj, I think the monthly numbers were exceptional that they've reported for October. Yes, in the con call post Q2 results, I think they've held on to their guidance both in terms of tractor volumes, the construction equipment business. And again, I think the kicker for the stock is going to be the execution on the railway part of their business, because that's around 300 crores worth of orders that needs to be executed over the next few quarters. And those are reasonably high margin orders. Secondly, I think in terms of the run rate, now they've got an Atom range of tractors and the Paddy range of tractors. Compact tractors, both of them, they're approximately doing 60-70 units a month. That ramp up can actually happen as per management guidance to around 200-250 odd. Now, if that starts happening along with expectations of stability in realizations, you're probably going to see the leverage probably get on the balance sheet. No requirement for full-fledged capex. So to that bit, again, I think as utilization picks up and fixed cost absorption starts happening, that becomes an added kicker for the stock. So yes, I think in terms of what guidance they've given, in terms of what we're probably looking for the Rabi or the winter crop, with reservoir levels remaining extremely high, my own sense is that numbers should be very, very good for Escorts over the next few quarters. So yes, I think the bullish stance probably stays on the stock.
Okay, as soon we're starting to have a countdown as far as market close is concerned. Hadrien, any closing strategies that you have?
Yeah, I would stick with the Axis Bank that we've already discussed. So, I would stick to going long on an Axis Bank, keeping a target of 620 and stop loss at 590 on the downside. Okay, and Abhijit, anything on your end? Yeah, it's the same, like I said, long in Ambuja, but hedging longs with maybe a put of 10,000 on Nifty, which is at about 80-81, because this gap area of 10,400, 450 on the spot, it can be a resistance. So unless that is crossed, it can be a bit dicey to hold only long. So some hedging should be there.
The other interesting pocket is power names, and every day we have one power name in the top 5 or top 6 gainers on the NSE 500. Today's session it's Kalpataru Power. It's not strictly a power name because it's a power transmission name, more like KEC International, but related to that space, up 11.5% today. But I must say, frankly, and maybe it comes as a surprise to a lot of people, but the stock of the last 30 days, amongst the stocks of the last 30 days, has to be Adani Power. The stock is at 50 rupees. It was less than 25, not less than a month ago. If you pull up the last 30-day chart, I'm sure you will see a 100% uptick on Adani Power. It's just had a one-way ride. Okay, yeah, it's about 90% in the last 1 month, but that's because it came off a little bit. But within the last 30 days, from that low point, it would have gained at least 100%, because I distinctly remember it's sub 25 as well. It's been a big, big mover. Now, Mayuresh, I know there has been one positive trigger for the space, for Adani Power, Tata Power, etc., the whole PPA revision norms, but it's a conversation. It's not a done deal as yet. What is it that the market is loving so much about the power companies?
So I think you have to clearly distinguish, Neeraj, as you rightly pointed out. I think you have to distinguish between the generators, you probably need to distinguish between the transmission players, and I think the BOP players as well. So I think for Adani and Tata Power, what has probably come through, and again, I think the ruling that is expected to come through, if any revision does take place, I think that does reduce the losses significantly, because what they were probably incurring in terms of under recoveries, that element probably comes through. So to just cite an example, I think for Tata Power's Mundra plant, the under recovery is almost 90 paise per kilowatt hour. So to that bit, again, I think any reduction on that front becomes a huge positive. The companies are working in terms of blending their coal requirements. So for Tata Power Mundra plant, again, for example, I think the blending is around 30% with lower calorie coal, and that does alleviate the risk in terms of increasing coal prices and fuel costs. But I think that element will reduce their operating losses from these plants, not extinguish it. So I think that needs to be very, very clear. The transmission players, and you talked about players like Kalpataru and KEC, for example, I think the T&D order book is extremely strong for these players. And what they've probably done in terms of their international order book as well, the diversification that they've done into railways and other segments of the business, I think those segments probably give it a leg up in terms of the T&D or the power business when it was not doing well. Now, with expectations of T&D orders and the order books that they've got, the execution that they're doing, the margin should sustain. Kalpataru still maintains a 15-20% top line growth, 11-12% kind of a margin trajectory. And the other parts of his businesses are seemingly doing well. So their JMC business has a reasonable order book with nice L1 order flows expected. Shubham Logistics is doing well. Their Indore real estate is expected to do well. The Thana IT plant or park has done well. So I think these pockets are expected to do well, and even the POP players. So I think players like Power Mech, for example, in my opinion, should do well in terms of order flows happening from NTPC, other power players, renewables, as well as oil and gas and the non-polar companies. And margins again expected to be around 12-13%.
Okay, Mayuresh, thank you so much for joining us and sharing your perspective on all the stocks that you spoke about. Just a few minutes to go for the markets to close, and Neeraj is standing by with what all is happening as far as the market is concerned. Okay, just before with that, we go to Neeraj. I want to highlight a few stocks. Yes Bank has moved to the highest point of the day. Pull up Yes Bank, that is doing well. Look at the surge that's come in Usha Martin at this point of time. It's trading at a fresh 52-week high, so that's moved up significantly. Bharat Road Networks now below the 100 level, so there is selling pressure that is there. We spoke about DV's Lab and how it has done of late. So DV's Lab is now at a fresh 52-week high. Look at PC Jewelers, up 21% now, so it's above the 70 level mark. So solid traction happening on PC Jewelers, but Neeraj is standing by with the wrap of all the top indices.
Yeah, thanks for that, Darshan. If I have the liberty, maybe a 20-second answer from Hadrien on the stock that Darshan just mentioned. PC Jewelers, Hadrien, would you trade it at all?
Absolutely not. I would, stay away.
Abhijit, would you trade PC Jewelers?
No, only if it closes above 60, not here.
Yeah, well, I kind of half suspected that answer, gentlemen. Anyway, stay on. We'll take any final thoughts from you post-market close. But here's how we're shutting shop. You would argue that, okay, it's not too bad, but the rest of the Asian pack wasn't doing all that badly today. We had a fair bit of green on the rest of the Asian pack. Maybe Europe didn't do too well. But yeah, we've had a very flat day in trade. Banks have gained a little bit, but I think the exporters put paid to any kind of hopes that we may have had. Mid caps and small caps haven't done too badly. So 1.67 for the small cap space, about 1% for the mid cap space. That's like a few and far in between. But let's talk about the large caps, and then Darshan will of course come in and talk about what's happening at the broader end of the spectrum. So Yes Bank 9%, highest point. Hindalco about 5.5%, Axis Bank about 4%, UPL 3.5%, BPCL about 3% as well. Interesting, the BPCL is trying to recover from the losses that it was smarting from post its numbers. Ultratech Cement about 3% too. Larsen & Toubro 2.5%. IndusInd Bank about a couple of percentage points, and HPCL about a couple of percentage points. What's not done well? HCL Technologies 4% lower, Lupin about 4% lower, Tech Mahindra 3% lower, Bharti Infra about 3% lower. So pharma and IT, principal culprits in the losses today. Must say, mention an NTPC and M&M. Not two volatile moves, but amongst the top 10 losers in the session today. But Darshan, if large caps were very somber, mid caps selectively had gains as well.
Yeah, you saw the move that came in on PC Jewelers up 20%, and some of the other counters that managed to do well. So a couple of stocks that we want to highlight which are trading at new highs. First of all, PC Jewelers is up 22%, not clear to the record highs, but nevertheless the gain has already come into PC Jewelers. Some stocks which trade at a 52-week high. DV's Lab for one, above the 1500 1500 mark. So there is strong traction that's happening on the other counter. Adani Power is the other one that is trading up at 52-week high. It's now close to the 50 level. All the news in terms of the tariffs and how CRC will decide it, playing positive for Adani Power. The other counter which is trading at a 52-week high is West Coast Paper. So there is strong traction that's happening on the counter. A couple of other stocks that I want to highlight, and that would include counters like an Ujjivan. Look at the move that's coming from the weakness that we've seen. Ujjivan, Equitas and Yes Bank. The pullback has been phenomenal for all these counters. Even if you take a company like Indiabulls Housing Finance has recovered significantly from the lows of the day. So there is enough traction that's happening on the counter. Few other stocks before I hand it over to Neeraj, and we can fire the other stocks that we want to highlight, indicating that there are moves that are coming in. So there is traction that's happening on some of these counters. But Neeraj, anything that we can spot on your end?
No, I think this is about it, Darshan. Some sense of what's happened in trade today, but the heat map should come up on your screen for just a moment as we wind up trade and look at what's moved and what's not. So this on close at 10,380, it's a flat day of trade with the Nifty advanced decline looking almost even Stevens, but the broader market advanced decline could well be interesting. We should have more gainers than losers because of the performance of the big caps and the small caps. So almost 2:1 in favor of the advances. Not a bad day, but the interesting bit, Darshan, could be the turnover in today's session, because yesterday's session, 40,000 crores of cash market turnover. Today's session too, not too bad. And the F&O turnover too at 18 lakh crores is on the higher side.
Today it's the Nifty Bank expiry, so yeah, obviously there will be more traction that will come in.
Yeah. And then the contributors list, just as a finale, and just showing, I think IT and Pharma should be right up here. Maybe not Pharma really, not heavyweights really, but IT, Infosys and HCL Tech, and then the two heavyweights, ITC and Reliance Industries. Banks tried to negate that a little bit, well, maybe managed to as well. But Larsen, the start of the trading day?
It's come off the highs of the day. Nevertheless, it's done well for itself. So L&T is one of them. I don't know if we can pull the Nifty IT index for the past 5 or 6 days. If you can get that chart, you'll come to know that slowly and steadily most of these counters have corrected significantly from the highs. They move 1 or 2% in a day, but nevertheless, this is the intraday chart. It's down 2% in this thing. But if you see the last 7 days, it's managed to move up. I think I was wrong. I believe.
Yeah, it's just that volatile days though, Darshan. On days when it moves, it really moves substantially. 3-4% the order of the day. In today's session, down about 2%. Anyways, final thoughts from our experts. In light of all that's happened today, Hadrien, what would your approach be to trade in the very short term?
Yeah, the approach definitely, would continue to remain to stay long. As I earlier discussed, the Bank Nifty, as you've noticed, has somehow managed to outperform the Nifty. So traction is definitely there in the Bank Nifty, and I think it has the momentum to pull it up further on. So I think 25,800, 25,900 would continue to remain my target in the short term, and your stop loss should be at 25,100, as I earlier said. So yeah, so remaining long should be on your cards.
Okay, Abhijit, what about you?
Yeah, I also have the same view. It is still a bullish market right now for the short term. Just this 30-40 points, which is a small hurdle, but it remains a buy on dip as long as 10,250 is held on the Nifty spot. And on the higher side, it can go towards 10,500 or maybe even 10,700 in November.
Okay, with that, gentlemen, Abhijit as well as Hadrien, thanks so much for joining in today and giving us that perspective. But it's a wrap on this leg of Countdown from Darshan and me and the team that put this show together. Thank you so much for watching, but stay tuned. The Market Wrap with Agam Vakil coming up next.